Faircloth once again back hanging out with Andy McMullen and myself for the Build Your Legacy Investment Series. We're going to be talking about capital raising, co-GPs, and portfolio deals and scaling and everything that has to do with capital raising today. So welcome, everybody. How you doing, Matt? How you doing, Andy?
I'm good, man. I'm sitting down. I feel like I should stand up after that intro, brother.
That's hilarious.
You know.
Well, we got to
I
bring
know
the
hype, man. I love it. Ruben
I
always
know, I
gets
love
the
it. I
crowd
love it.
going.
Thanks for having me back,
You
guys.
feel like you're,
Yeah,
coming out like WWE.
It's tons of fun. Guys, so everybody that's listening in, keep your questions for the last 15 minutes, and then we'll kind of open it up to ask Matt anything, or Andy or myself, anything that you want to about capital raising. But we're going to get started with just brief intros, like 1 or 2 minutes. I got the man, the myth, the legend, the author of Raising Private Capital, Matt Faircloth, on here. Why don't you spend about a minute or two just breaking down how you got into real estate and this thing called multifamily syndication, Matt?
Oh, no problem. I got into real estate because my girlfriend, now wife, put Rich Dad Poor Dad in my hand many, many years ago. And that was enough to get my head turned and get me all in. So soon after she did that, I quit my day job and got into real estate investing full time. That was in 2005. And we built the business on our money, and 2005 was a way different time to invest in real estate.
Mm-hmm.
And so we built it on our cash and on cash that we had gotten through, refining the same properties over and over again, and just kind of parlaying that money over and over, and some immediate family members' cash as well. Built the business for years, got through the downturn, and then really started to scale as America came out of the downturn in 2011. Started to buy more and more properties, raising capital for larger and larger deals. My first syndication was not like a big fat 100-unit apartment building or 200-unit building, or what a lot of people here might want to get into to get started. My first syndication was 2 single-family homes, and I recommend that folks let their ego sit on the shelf and start small if they can, or you can join a bigger team and start big, which we can talk about. But my first syndication was a friend of my wife's who gave us $50K, and we bought 2 single-family homes with that money. Did right by them and kept going and scaling over and over and over again from there. And now we're buying apartment buildings and larger assets in a couple of specific states. And the syndication thing, we can get into that further as well, but that's just became the vehicle that just made sense for putting more and more capital together as an aggregate investment into larger buildings.
Very cool. Andy, I'm curious, how did you and Matt Faircloth meet? I mean, when did it kind of condense into this thing where you raise capital for Matt at
Well, actually, I met Matt. I read his book. I don't know when did your book come out, Matt?
2018.
2018. Okay. So I read his book. I went to it was like a Bigger Pockets. He was speaking. I tried to talk to him. He gave me the Heisman pretty much. He's like, oh yeah, go talk to my partner.
I remember it was the best ever. It was a Joe Fairless's best ever thing. And it was right before COVID came out, and it was 2020. I know it might've been the year before that, but yeah. And you told me that like, yeah, I met you and you gave me the Heisman, and I'm like,
go talk to my accountant or something.
And I don't remember that.
I know.
I don't
I'm
remember
exaggerating
that.
the story, but then
I still feel awful about
friend,
it, but Andy's kind enough to remind me that I did that, but I still give him love. But yeah, then we met on a deal like 6-7 months later. It was a big stretch for us. And Andy came in and helped us fill an enormous equity gap on that deal. And I'll never forget the help he gave us on that one.
Yeah. And we got some of the investors, I think, here on this call. So it was a big one. It was a 300 unit in North Carolina. And doing great. Ridge. Doing fantastic, that deal. I don't know if we'll talk about it later. I am kind of curious because we can kind of weave in some of what's happening today in the market and kind of where we see things happening with inflation and rent growth and how sustainable it is, because I think a lot of people on this call are probably thinking, well, what's next, right? And so Matt's group typically buys stuff in C properties in probably B areas in some cases, and really tries to turn them around. So we'll get into all that. I'll let you kind of run the show, Ruben, but eventually I'd like to hit a little bit about what people are probably thinking about what's next.
Well, all right. So I have this book, Private Capital, Raising Private Capital. There's a couple of things that I wanted to hit on here. I'll just take a couple of topics right out of the chapters. Tell us a little bit about raising private capital from your perspective, Matt.
You mean the book thereof, or
No,
the,
just
the
so
book, or the investment tool?
so for example, in the first chapter, you talk about sources of private capital. What are some of those?
Oh, there's three, right? And that is, cash, and not like stacks of greenbacks, but that's just liquid cash, liquid money, sitting in checking accounts, sitting in savings accounts, sitting in CDs, and in stocks too. So anywhere that it could get liquidated and turned into a check within a couple of days, that's what I call cash, right? So the second thing is real estate, and that could also be viewed as things that could get collateralized to produce money. So that could be a stock portfolio, could be a life insurance policy, but that's equity that an investor holds. We just call it real estate because a lot of times folks are showing up to us that have home equity lines of credit or equity held in something that's fairly illiquid, but they are able to collateralize that illiquid thing to produce cash. So that's the second one, which is real estate. And the third thing is retirement accounts, and that is primarily self-directed IRAs or solo 401ks, where a very liquid thing, which is a retirement account, can just get directed into something outside of Wall Street. So that those are the three different places that are the sources of private equity.
So when most people think about raising capital, they think about raising from limited partners.
Yes.
Which is the main, I think, bread and butter of how people raise capital. You can also raise from family offices and institutions and
You can.
a variety of other, preferred equity and a couple other ways. Primarily today, what we're going to be talking about is raising from limited partners, and also this thing that I participate in called co-GP structures, raising from co-GPs and partners. Now, there's some things that you got to think about when you do this, which is people can't just get paid on a transaction basis for raising capital and then walk away. They have to have some kind of ongoing duty and participation on the general partnership side in order to stay legally compliant within the SEC guidelines. And we'll kind of chat a little bit about both of these, but
Sure.
Let's start with the LP. So how do you typically, if you're getting started, gear this towards the scaling capital raiser, the person that's maybe raised $500,000 or is looking to raise for their first syndication and partner? What do you need to do to start branding and educating and getting people on board with investing into your deals? Let's start there.
You got to brand yourself first, right? It's not about the deal. If you're passing a hat around when you have a deal, you started too late, right? What I talk about in the book is about, branding yourself and developing communications between yourself and your network on, hey, I invest in real estate and you can too. And I'll do the hard work. I'll deal with the tenants if that's part of the equation, or I'll deal with the whatever it is with the property manager and all that. And I'll do the doing. I'll put in the work. And so I'm calling myself the deal provider. So the deal provider provides the network, the deal, the opportunity, their analyses, their understanding of real estate. And the cash provider is the LP. They're just putting in money. But you need to develop the understanding between those cash providers and yourself as the deal provider to marry those two together. And your cash provider network needs to understand you to be a deal provider. They can't be, it could be somebody you used to work with, but they can't look you as like, well, that's Andy, my coworker, or that's Ruben, the guy that I go to church with. They can see you as that, but it's got to be Andy, my former coworker that now invests in real estate, or Ruben, the guy I go to church with that now also buys apartment buildings, right? They need to see you as that. And you do that through newsletters, social media feeds, whatever, by talking about what you're doing in real estate. If you go to a cocktail party or a bowl-a-thon or whatever it is you're going to, and people ask you what you do for a living, I'm sure what you do for a living is very noble, but for goodness sake, don't tell them that. Tell them you invest in real estate, because that's going to generate more of a conversation. People don't change the subject when you tell them you invest in real estate as a living. They're going to, really? That's interesting. Tell me more about that, because it is an interesting thing. So the first move, Ruben, is to let people know in your network that this is what you do through newsletters, personal conversations, and social media conversations.
All right. So talk to me about confidence, because on episode Capital Raiser Show 174, you mentioned something that kind of shook and rattled me a little bit. You said basically, if you're afraid to ask your parents to invest in your deal, then you don't believe in yourself. Talk to us about confidence.
Yeah. Well, listen, that gives me the heebie-jeebies too, because it's my mama, and everything at the end of the day. And I want my mom to be taken care of. But here's the thing. If I believe in my business and my mom does invest in me, so does my father, so do my in-laws, my wife's parents, and my family, and a lot of family members of mine have capital with us because I know what I've built makes sense. I have my own capital in it. I invest with myself too, right? If you're not at that level where you don't think that what you're presenting could get put in front of your immediate loved ones, you need to investigate it to the point where you need to understand it and investigate it to the point where you think that it does, right? Not that you need to go running around and touting. And I'm not saying that, oh, my mom invests with me to brag on what I do or to brag about that. I'm just saying it to say, I believe in myself to the point that I do. And you guys need to, if that gave you guys the heebie-jeebies, then good. Look at it further to make sure that you feel 100% confident that what you offer is a true alternative to Wall Street. Not that it's better than, it's just an alternative to, right? It's a true alternative to Wall Street, and you should feel confident putting it in front of your parents. And if you don't, then look at it again.
Yeah, I have a friend, Melanie McDaniel, that likes to say, if you have imposter syndrome and you want to get over it, then stop being an imposter, right?
Yeah.
So be a real estate investor.
Yeah. And at bats give you that. The thing, people, it's a chicken and the egg thing, right? People think that once I'm confident enough, I will start doing things. Once I'm confident enough, I will start taking action. I will go and quit my job. I will go and ask that person out on a date. I will go and do whatever it is going to do that requires confidence once I have confidence, right? The people realize the equation is actually upside down. Action creates confidence. Okay. Action creates confidence, not the other way around. Confidence does not create action. Once you start doing things, once you start getting outside your comfort zone, you're like, oh, hey, your comfort zone will follow you. Your comfort zone's not going to stay where it was. It's going to trace a few steps right behind where you are. And when you get to where I'm at in life, you end up realizing that fear is something that just exists in the background all the time. It's just there. I get used to it being there. It's like my little friend. I just feel my self-confidence down, or feel my fear, or feel my whatever. And I just know it's going to be there every day. And I just get used to it being around. And that's how I know I'm stretching myself and going to new levels. I feel a little afraid still.
Yeah. I got a quick question, Matt. So
sure.
You wrote that in 2018. I'm wondering if there's anything that when you read that book, you either cringe upon or needs some kind of updating, over the last few years. Certainly capital raises got a little bit more, I don't want to say, there's a lot of people doing it wrong, right? So there's probably some compliance things that maybe you would have included. But I'm just curious, how would you have updated that book?
There's plenty of that, boy. If I were to write a Raising Private Capital 2, like a sequel, a return of Raising Private Capital, a return of the Jedi Raising Private Capital, then I would probably talk more about how the SEC's rules have changed, and how the SEC, and through things like the Jobs Act, which was a thing, but it wasn't applied until recently, and things like Reg CF have changed, and how one can raise capital under the good graces of the SEC. Because at the time that I wrote Raising Private Capital, I didn't want to make it a SEC manual for liability issues, and because folks should just talk to attorneys. I don't want to give you how to dodge the SEC in a book kind of thing. It doesn't sound like a good book for me to write, but I do think that I probably would have gone a little bit further there, Andy, on how to be compliant, because I didn't go there too much in the book. The book's really about how to find the money, how to close the money, how to build networks around the money, what to do to keep your network happy, and how to untangle the money. And also syndicating money for apartment building deals is one way to apply private capital. And the book talks about that, but it also talks a lot about private debt.
Very good.
Which I think, sorry, Ruben, I'll just one, you feel a little bit more comfortable now investing in debt, right? Did you start a debt fund, or are you looking at a debt fund? Like, what's your feeling on, some of these markets are changing quite a bit, right? So you want to be investing maybe in some more of this kind of single flippers or single family home rentals. What's kind of your next horizon?
As the market's changing, Andy, I'm looking more towards things with collateral. I'm looking more towards things with a steady check that come out of them versus like enormous gargantuan upside. I think the days you're not going to see as much Facebooking soon. People tooting their own horn on Facebook about how they made 30, 40, 50% for their investors in 18 months or whatever. You're not going to see as much. Those folks aren't going to talk as much for some reason, but that's because the market's going to change, right? And it is changing now. I mean, at the end of the day, we got a quote from Fannie Mae the other day at 5.3% to borrow money for an apartment building. Fannie Mae gave me a quote 6 months ago at 3.15%. Okay. Same, but the cap rates have stayed the same. How's that possible? So I think that you're going to see exits change and all that. And so because of that, Andy, we are redirecting and looking at more in and out kind of stuff, more things that maybe don't have 7 to 10 year time horizons, and certainly more things that have collateral, and debt is certainly one of those things. We're still going to buy apartment buildings and buy tons of them, but we're going to also offer up a few different things to our investor base, because apartment buildings might need to be a part of the offering, but not everything that we offer to our networks in the next couple of years.
So on the LP side, one more thing, Hunter Thompson likes to say that a lot of people are very focused on improving their closing ratio from 10% to 20%. And really what their focus should be on is, how do I get in front of 10,000 people?
Yeah.
So I want to talk about platforms and exposing yourself and building this notoriety and a brand. What are some of the things that the beginning or scaling multifamily syndicator and capital raiser can do to get themselves out in front of more places?
I am a fan of transparency. You guys got to do whatever it is that you need to do to get the eyeballs on yourself, right? Just make sure that you are prepared to be the person that you put yourself out to be in the world. And so I figured, what the heck, I might as well just be myself, But if you want to be this larger than life, fake it till you make it kind of thing, that, like I am the end all be all apartment building expert. If you want to be that, well, be prepared to be that. So whatever you do to get attention, what worked for us is transparency and giving away most of our secrets. There is no secret. That's the secret of real estate investing, is there is no secret. It's actually not that hard. It's hard, but it's also not. It's not that complex of a business. We tend to give a lot of our understandings and our experiences away for free through YouTube and through the book and through Bigger Pockets or whatever. And so that's the way we've built our notoriety and built our means to get attention. For other folks looking to raise capital to get attention, you can do what you want that seems authentic and wholesome for you to do to get attention. Whatever you do, just do it repeatedly and over again. And I think that consistency is the key when it comes to getting attention.
Andy, any questions about LP raising capital from LPs before we go into the Coach EP structures?
No, go ahead. Let's do it.
Okay, sweet. I started the show called the Capital Raiser Show thinking I want to learn about raising capital, but understanding that my avatar was probably never going to be a limited partner. It was always going to be an active kind of investor looking to scale. And then as the show grew, I started realizing that I had access to all these capital raisers that wanted to do deals with us. But the way to do this typically is either to make them part owner of your funds or to co-GP with them. Now, this is something that you do as well, Matt, and Andy, you do. So I'd love to hear you guys talk about, when you're scaling into co-GP, how do you put the whole, we're not going to talk about compensation particularly, but let's talk about putting the team together, bringing capital raisers into your co-GP. What does that look and feel like for the scaling multifamily syndicator?
Eddie, do you want to jump in on that? Give your thoughts as well on that one, or do you want me to hop in first?
Well, no. What I would say is, just to set a screen for Matt here, is a lot of the stuff that we've done for our basically syndications, our capital raising platform, is basically been taken out of his handbook. I remember we were raising capital and we weren't doing what we should have been doing. And he calls me up. He's like, hey, look, you're my guy. I thought, I'm just wondering if everything's okay, et cetera, et cetera. Just what leaders and coaches do, right? With people that are kind of, hey, look, are you going to be helping us with this or that? So I try to stay tethered to the partners, what we call them, JV partners, make sure that they feel like they're part of the deal, that they're part of the plan, that in order for us to succeed, they have to succeed. So I think all those pieces are, and the other part is, I think you do really have to, there's kind of a dating period with the people that you're working with, because these people are going to be attached to you for 5 or 10 years, right? They're going to have an active role. They're going to be doing, whether it's asset management or they're going to be helping you with your back end office, they're going to be on your board meetings. They can't be dull and they can't be, deadbeats, right? So that you kind of have to have that nice mixture. So I'm sure Matt maybe could talk a little bit about his handbook, because they've had many capital raises and then they get frequently asked questions, and sometimes you get younger partners or less experienced partners and they don't necessarily know how to answer, some of the nuances of the deal. So let's put that all out there so that people can really,
well, that's something that's an interesting conversation. So what we found is that, well, first of all, like the reason why you need, why if you maybe want to choose to bring in sub capital raisers or people to help you out and getting the deal across the table, is that everybody's got a network, right? And my network's only but so big. I don't know all the people that Andy knows or that anybody else here knows, right? I don't know. So you guys have people that like and trust you because you're you. And so that love and trust that people have for you and your network is something that we can partner up and give me access to put a deal that makes sense out to them for them to invest in the deal. And once you vet the deal and it makes sense, then maybe you're willing to join the capital team. But there's a level of trust and faith that the lead GP, the lead sponsor, us, the DeRosa Group needs to have, because at the end of the day, you got to close the deal, right? So you say like, okay, I need to assemble X amount of equity, hell or high water, I need to get there because I've got money hard. I've got my reputation, my personal guarantee, my everything online to close that deal. And so no matter what happens, I need to figure it out. And so you need to have an authentic conversation with the capital raising folks you put together on what it is they believe they're going to be able to pull across the goal line, and give them, parameters and the spectrum and everything like that, and make mutual agreements. Once that's done and you figure out what everybody's going to be able to bring to the table dollar wise, or what they believe they're going to be able to do, then you need to have regular communications, as Andy said. And above all else, we know this because we've done it the wrong way, right? Most of the things I know how to do, I know how to do wrong because I've done it, and I know how to do it the right way too. And so the wrong way to do it is to let anybody run around and talk about your deal that's on your co-GP team and say what they think is correct about the deal. The correct way to do it, which is where we're going, I think, in this conversation, is develop a toolkit for those that are raising capital for you, and to say, this is the script you're going to have. This is what we are saying about the deal. This is what makes this deal amazing. Here's your benefit bullet points. This is why this deal is amazing. This is why this deal has the unfair advantage over the other thing your LP is looking at, right? And the reason why you do that is because you don't want your co-GPs to interpret your deal a different way and mistakenly say something that's not true about your deal, or to represent you in a light that you don't like, because everybody uses social media to get attention. So the last thing you want is to go see in somebody's social media post that's incorrect about your deal, or that's making promises that you can't, making promises for you that your deal can't cash. So at the end of the day, that's what regular communications, as Andy said, is all about. And that's what developing that sheet of music that everybody's singing off of is super imperative to develop, and give that to your capital raising team and then review it on a regular basis.
Andy, do you want to talk about your first co-GP? I'm not sure if it was with Matt or not.
I'll tell you, my first co-GP was pretty much a disaster, honestly. And I'll tell you why it was a disaster. It was a disaster because the GP that we invested in, that we kind of decided, hey, look, let's work with these people, were terrible, absolutely terrible at reporting, right? And so one of the big things for me when I'm, kind of vetting an operator is, hey, look, how are my investors going to be treated, right? Because that ultimately falls on me. So one experience was, a great operator, good at doing the business, good at operating the business, maybe even good at, running the construction, the crews, the property management, but we wouldn't know it. We wouldn't know it because we never got an update, and neither did his investors very often. So that's the kind of thing. And we've had a couple of experiences. I've been in this game about as long as Matt. I mean, I started off early as a broker, and then kind of basically evolved into the development side and then the acquisition side. And so there's always going to be some warts. I know Matt has some horror stories too that you guys have probably, maybe you've heard. There's operators that they seem great, and there's a self-interest, right? There's a self-interest that sometimes rears its ugly head for operators. And we had one that was basically trying to get his own refi done with the net worth and liquidity of a recent close that we had. So you talk about somebody basically taking investors' money on a deal that closes in, let's say, January, and trying to hold that money as long as he could to get his refi done, right? So there's
Oh,
things
wow.
there's things that you kind of like you pick up as you go. Now, should we have known better? Of course. Everything that Matt looks back, he's like, yeah, I probably should have known better about that. This is why it's in the toolkit. I probably should have known better about that. This is why it's in the toolkit.
Yeah.
So there's things that you pick up along the way. But one thing I do want to tell people, because I feel like there's a real fear about partnering up with people because they have that bruise or they have that wart. And I don't think, maybe Matt would disagree, but I don't think that we would be where we are without partners. So that kind of like, yeah, you get a bad breakup, and it sucks. And, you grieve, for a little while, you drive by their house maybe too many times. And then finally you got to get over it, and you got to get back on. So I think that people are still kind of stuck in that fear of a bad partnership, but it can be immobilizing if you let it.
So
I can't agree with you more. Go ahead, Ruben. Sorry.
I got to bring this up because, Andy, one of your philosophies is not only do we want to work with the best operators that are good at what they do, but we want to work with operators that are doing good, right? So this philosophy of philanthropy, or, resident perspective, taking care of the residents and people that live there and being a good human being is really important. At the last company that I was with, I saw that they had these kind of values. They went and did really nice things for the residents, gave them parties, and seemed like, spiritually speaking, these guys were very aligned. And we brought some co-GPs in. My first experience in my first syndication, 90 unit down in Tucson. We brought in some co-GPs. They brought in around $500,000. Things were good. And then what we started to realize, because I was still relatively new at this company, is that even though they were good human beings, doesn't mean that, they're great operators too, but that doesn't mean that they have all the pieces together. Their communication infrastructure was really bad. Their marketing, their branding was really bad. So investors, because they transitioned from wholesaling into multifamily syndication, and when you're wholesaling a deal or working in that space, your investor communications is minimal. Hey, we're going to take down this deal and we're going to sell it in 3 months or 6 months, and this is what you're going to make, and that's it. And there's no communication in there. But once you go into syndication, the investors are requiring a great deal of consistent communication and responsiveness from the operator, which these guys, that was the one part that they were missing. Great operators, great human beings, communication, marketing, branding sucked, right? So talk to us a little bit about this, Matt, and then we'll ask you about your first co-GP as well.
Yeah, well, I don't want to echo chamber you here, but just to agree with what you said, is that communication, really, really works well. And we use, I see my man, I got to give him a shout out here, my man Brad from InvestNext on here. I use InvestNext regularly to communicate with our investors. So, and he's that, I don't even get a free toaster or anything from him for me saying that. I just really believe in their brand and using things that to make it easy to communicate with your investor base. So why would you not? Here's the thing. This might not be true, but if you don't communicate with your investor base on a regular basis, it looks like you're trying to hide something, right? And so if you're not, then brag on yourself, man. Put photos of what's going on up there in your InvestNext portal for your investors to see, and send them some bullet points, and then we do monthly updates, quarterly financials, and an annual conference call with our investors. And anytime an investor wants to walk on one of our sites, and they certainly have regularly, we'll introduce them to the property manager and organize a tour. And we also tell our investor base typically when we're going to be on our sites, and some of our investors have chosen to meet us out there, right? And the tool is called InvestNext, INVESTNEXT, or I could look on my water bottle right here that says InvestNext on it as well. So
very cool. All right, so we want to hear about your first.
He did give me not a free toaster, but a free water bottle.
So because you have been scaling with more and more co-GPs, tell us about your first deal and how you've scaled to the point where you're taking down 670 unit portfolio deals with multiple co-GPs.
Yeah, man. How about that, huh? I still pinch myself that that's where we are right now. I'm just eternally grateful to be where we are. That was an interesting opportunity, Ruben. And I wish I could say, I'm going to go climb that mountain right there. And that's what we did. That's not how it went down. What happened was we underwrote 240 deals in 2021, 5 of which became real deals in that year. And then it just happened that a lot of offers we sent out, a lot of bids and things like that started to culminate around the same amount of time. And I was talking to my acquisitions team And I said, hey guys, it looks like, we're going to have a lot of this hit all at once. We thought about doing multiple syndications running concurrently and building multiple teams and that. And so I didn't like that idea because I just didn't think investors would like, well, you can invest in these deals in Kentucky or these in North Carolina. So I talked to a few people that are, a couple miles above me up the ladder. And they were like, they told me every deal they do with their investor base is done as a portfolio because it diversifies, it reduces risk. And there's somewhat complex ways to assemble it, but it can be done through multiple LLC levels and stuff like that. So we were convinced pretty quickly to bundle all these deals we had gotten a yes from the sellers on together as a portfolio. So it was a smattering of like an 80 unit apartment building all the way up to a 300 unit, but it all added up to 670 units. And so the question, Ruben, is I've got this big enchilada we got to take down here. What do you do? Well, we were able to assemble a reasonable amount of folks to help us with it. And we, luckily enough, it's not our first rodeo either. So we've got a pretty big following. So we were able to raise the lion's share of it ourselves, but we're able to put in some folks that were able to join our company, join our GP team, not just go raise some money for me, join our GP team for the next 7 years and be a part of the company to help us raise equity. Yes, but also join our advisory board and be a part of that company for the next 7 years to help us bring it to the promised land.
All right. So one of the beautiful things is when I was first meeting you, I was actually going to walk this portfolio and met a bunch of the people that were partnering with you. And we basically got this amazing Airbnb in Lexington, Kentucky. We hung out there for a few days, played some
Don't
poker.
ever play poker with Ruben.
So that was a
Ruben
lot
will
of fun.
pretend he doesn't know how to play poker. He'll sit down at the table and be like, so what's wild? Are we playing with wild cards on this one or not?
Is it deuces?
Before you know it, it's like, man, all my money's not in front of me anymore. How does Ruben have all this money in front of him?
And
Sure,
you don't play all you let everybody kill each other while you just watch is what happens. Because people get antsy. Matt's just like putting all this money on, and before you know it, his money belongs to somebody else, and then I just got to beat that.
Belong to you, brother. I read Ruben the wrong way that night, man. Like, man, this got to know what he's doing. He's got to know how to play this game.
Talk to us about this. Like, putting together.
He does know how to play.
Let everybody come to an Airbnb and walk the property together. Talk to us about how important it is to bring the team together, to communicate with them, to have weekly co-GP calls. Tell us more about this.
Well, Ruben, as you and Andy know, we are big on building camaraderie, right? And another raise we did a couple iterations ago with Andy, I had one of my guys, Hervé, who's sitting in the room next door. He was like had the capital raisers talking trash with each other, in a loving manner, right? In a loving manner. But it was like a little bit like, hey man, Andy, are you going to let so-and-so show you up? He's like, no, I'm not going to. And before you know it, we get the ego involved, whatever. And all of a sudden, Andy started raising a lot more money when he felt when we made it feel like he was in a race with somebody, because people want to compete. You want to win together. And it was good camaraderie, not like trying to cut each other's throats, not like boiler room, but it was like a collaborative race to the finish line together. And that's what we wanted to create. Additionally, I talked before about getting everybody in the same sheet of music and making sure everybody is presenting the offering under the same light. Well, why wouldn't you have all your capital raisers walk the site at the same time? So I could say, hey guys, listen, see this rent roll here, or see that unit over there. This unit's really nice. This unit's renting for $900 a month. See the unit right next door, exact same floor plan. Let's look at it. Let's critique it. They're only getting $700 a month for this. Don't you guys see you see, oh yes, I see it. They can touch it. And these carpets are really awful shag 1972 carpet. And we're going to put in this beautiful plank flooring here, right? They can see it and feel it and touch it. And I can go and give them my selling points together with them, and they can collaborate, sometimes contribute to those talking points. Additionally, as you guys know, if you guys know me, I'm, big on producing camera crews and for shooting videos, because people like to consume video content. It's easy to consume. So we showed up with a full camera crew and went to all the capital raisers, said, hey, listen, who wants to shoot videos of this building? And so we let people create video content for their followings, produced and edited by us, so that we control what it looks like, so it looks nice and shiny, but we'll make it for you. Right. So why wouldn't you do that? Why wouldn't you empower your capital team for success? So that's what we do.
Yeah. One of the things that you'd show us this graph every week of who was doing the least amount and who was doing the most amount of work on the capital side of things, which was really encouraging for us and kind of motivating, like, hey, we're not doing our part, we need to catch up, let's crank up the dial and really go after it and work with our people.
That's okay. Listen, reality's okay, right? And there was by no means a means to throw water in anybody's face or be like, all right, look what you did. We're trying to rub anybody's nose. We're just like, hey, this is where we are. So, facts, here's the data, this is what we have, let us know what you need. And we found that level of honesty with people was refreshing for them and helped motivate too. So,
hey, can I ask a question, Ruben? So, Matt, one thing that I've been most impressed with your guys is your team. So it seems like you've been really, I don't know, I don't want to say blessed, but certainly probably took a lot of
you
work.
Can say that word, that, I'm okay with that word. Yeah, go ahead.
The asset management team is, like I said, I've been doing this for a long time, is amongst the best I've ever seen at one, telling the truth about, like you just said, this is reality. We're a little bit less in occupancy than we thought. Maybe we've got a little bit more in rent. Here's exactly our approach to handling this issue and dealing with it, and hopefully improving it. And I know we've had some calls where things haven't been great, but we usually in the next month they turn around. So I'm just curious, like your team building kind of strategy. Would you put yourself as kind of more hire the right people, get out of the way? Is it more about, hey, I just want to have kind of I want to oversee as like a CEO level would, or I want to just be the front and let some of these other guys in the back office? What's your kind of your strategy for building your team? Because I know a lot of people that I see here on this call are at that kind of scaling stage.
Yeah.
And they're kind of trying to figure out what's my next move, what's my next hire, who's the most important person in my team to.
I mean, listen, I love the book, The E-Myth, but some of the things that are talked about in the E-Myth, I think are flawed, because the E-Myth talks about, like, you as the entrepreneur should like design and do a lot of the jobs in your company as you grow. So you learn everything there is to do about that job. I think what that'll do is you'll learn a bunch of things you hate doing. And you might want to give out, man, I hate doing this. Give this away too. Give that away too. What I prefer is discovering your core genius, discovering your given talents, right? This is what I'm great at. And also this is what I stink at. And so let me find things that I'm not good at, and let me find people that are great at those things. And let me use things like personality assessments. Because it's one thing for me to say, well, I don't like doing the asset management side. And so let me find the first warm body with a heartbeat that shows up, that's eager, that's willing to take on asset management for me. Well, that's like, looking through a deck of 52 cards, looking for the ace of spades, right? Well, you might get lucky. You might catch the ace of spades, or you might not, right? So what I'd rather do is I'd rather determine what the parameters, the personality and skill set required for that role would be, and go find the right person. And that's how we found Justin Fraser and Hervé Francois and a lot of our phenomenal team that are A+ players that I'm just standing on the shoulders of, that make me look good every day. They are the ones that are in the right seats because I figured out what I didn't want to do in the company first. And then I designed a role around things I didn't want to do. And if they were done really, really well, they would take me to the next level. Right. And so that's what I recommend people do, is like, write your own job description first. Right. This is what I want to do. This is what I'm blessed with. These are my core talents. This is what I'm great at. And then this is everything else that needs to happen in the company to make it run well. And don't make those things less than you, make them equal to or even more than your level of importance. Right. And then I'm a firm believer in personality assessments. So then, use those things to elaborate and find the right skill sets and the right butts for the right seats.
What are you using? Are you using like an MBTI test?
Predictive index.
Which one?
I use the predictive index.
That one's good. We're going to have to check that out, Andy.
It's a great tool.
Andy, real quick. I mean, my last company, there was like around 6 or 7 people that all focused on operations, and they brought me in. There was one dude that was supposed to raise all the capital for this. So all of this energy was placed on operations and very little on capital raising. Now, joining forces with you at Legacy Acquisitions, we have like 6, 7, 8 people that are all focused on raising capital. Can you talk to us a little bit about the formation of your team real quick before we open it up for Q&A?
Yeah. So, I mean, from my perspective, we came at it a little different. When the, rent control was enacted in California, we kind of stopped doing just our own lead sponsor deals, and we started kind of partnering up with other capital, with other co-sponsors, right? People like Matt that we knew already had a foothold in a certain market. Then we've kind of evolved to the build to rent, where we're doing our lead sponsor deals in basically the Southeast, right? So we've got, 3 projects we're working on right now. So as we're growing, there's a much larger need for bringing in capital, right? So we've got the acquisition team, we're finding the sites, we're getting the properties entitled. We've got basically the loans that we're having to sign on. So all of that stuff is handled, but in order to keep growing, we definitely need to raise capital. So I think you always kind of figure out, like Matt said, what are some of those things that you're just not very strong at right now. I think on the asset management, and I think to a certain degree, we've been able to raise kind of for our small level, but now we got to level up right now. So Matt's at 670 unit portfolio deals, right? We're at 100 to 200 unit built to rent projects. But if we're going to do 3 or 4 or 5 or 6 a year, then we're going to need more capital. We might need not just private capital that is $100,000 investors. We might need debt and equity guys, right? Which come with a whole additional strings attached, right? So I think for our group, Ruben, if you consider Pete with his background in Exxon top 5 company, with his ability to scale, you kind of came in the marketing, which I was saying, like, as soon as I heard that you were available, like, let's figure out a way to grow this thing. So I'm just kind of trying to pull the best people. My philosophy is very similar to Matt, is that I suck at a lot of things. And I know he didn't put it that way, but he does. He sucks at a lot of things, just like everybody else. We all suck at a lot of things, and you got to bring in people. And there was a certain time in my life where I wanted to be kind of the guy, and we'll have other people that will do some things that maybe aren't as good, but it's good enough. And to me, and if you want to grow, they got to be much better.
It takes a lot of humility to admit you suck at something, Andy. I mean, it takes a lot of being humble and understanding that we're all just human, to understand that I'm only great at a few things. You got to own your greatnesses and let the shortcomings go. Right. Very aligned philosophy. Ruben, can I do a quick plug before you jump to Q&A, or you ready to go? Okay, cool. Because I might forget to mention it. If y'all want to hear more about us, it's derosagroup.com, DEROSA group.com. Big thing. We are hiring. And I know I'm in front of a bunch of great salespeople right now. DeRosa Group, as much as I love working with capital raisers, and I do, we also want to bring more in-house, because with DeRosa Group, we get somewhere between 18 to 20 inbound leads every week from people that want to invest with us. And we don't have the team anymore to process all those folks and to point them in the right direction. So DeRosa Group is hiring, and we pay very well. And that, so you might have to drink the Kool-Aid and come and work for a company versus building your own. And if you want to do that in a company that's dedicated to transforming lives through real estate, that's our mantra. I love that phrase so much, I put a trademark on it. We are dedicated to building a team that helps us transform lives through real estate. So if you are great on the phone, great at talking about real estate with people, I'm hiring. And Ruben and Andy, if you guys have any referrals you want to forward to me, we're ready to roll in that. And we want to bring somebody in-house sooner than later that can help us grow this puppy. So
any last words about growing your capital raising team before we open it up for Q&A, Matt?
Yeah, man. Don't let your ego get in the way, guys. Don't feel like you got to go buy. Well, Matt Faircloth bought a 670 unit with Andy and Ruben, a bunch of other people. Yeah, we did. But guess what? That was called DeRosa Capital 15. And that's not because that's mine and Andy and Ruben's lucky number. Okay. 15 is the 15th time that we've done a syndication. Bear in mind that this is a long ladder. It's a long staircase. And I don't want y'all to dabble in real estate and get in this thing for a couple months and then decide to get into Bitcoin next. This is a career choice of being in real estate for the long term. So it's okay to start a little bit smaller than what your ego might tell you should. Start small and scale quickly. That's my advice that I have for those that are trying to raise capital for themselves.
Awesome stuff. Let's open it up. I'm not even going to do a major transition here. Who's got a question for Andy, Matt, or myself? Particularly direct them towards Matt.
Hey, Matt, Irish Kevin here. How you doing?
What's up, brother?
Got the book right here, kid.
Oh, good to see you, man. Thank you.
Yeah, I missed you with MF and Con. I wanted you to sign it, but you disappeared.
It's a MF and Con.
Yeah,
how about that?
Yeah.
Thanks, Shaq, for putting that in my brain. Yeah.
I got a good picture.
I was required to be down the street at my wife's conference, but I was there for. Oh, you were the one that got. Did you get pulled up on stage with Shaq?
Yeah.
That was awesome. You were wearing the Shamrock shirt.
Yeah, I went backstage. I went backstage with him. I felt like Tiny Tim.
I'll bet you. Yeah, dude, he's a monster. Yeah.
No,
that was awesome. I didn't realize it was you. I was sitting about 3 rows behind you. I didn't realize that you would. You got pulled up.
He actually signed my book because when he played at the Celtics, his nickname was the Big Shamrock.
Oh, did he? Okay. Yeah.
And I had him sign it below Dan Hanford's name because Dan's #1 in my book.
That was yeah. They're two great men, man. That was a great conversation.
I had a question for you.
Sure.
Everybody talks a lot about, best in class and asset management, which is this book here. So without being good in asset management, you're never going to be able to retain your investors, right? Because, you're going to piss them off, turn them off or whatever. I'm involved in like 6 syndications right now. And when it comes to investor relations, I give out a grade of like a C to everybody. And they always say like, oh, we're taking on more people to do investor relations. But, even when they say they do that, I still don't get like much of a response. So I think investor relations is key. If you want to retain a bunch of them, plus bring on more, because the people that are in your group are going to be either speaking highly of you or not highly of you.
Yeah.
So for me, it's just like a simple phone call. I don't care if you get like 100 investors in your database or 500. Make sure there's someone in your group or company that can just call people and say, hey, what can we do for you? What do you feel like we might be weak? Where are we, doing good? And then, take that back to the group, break it down, have like a survey. But I just don't see it happening. So that's why my forte right now is going to be raising capital and investor relations. And I'm going to go with that because I think underwriting sucks. I hate doing it.
Yeah.
By the time you underwrite a great deal, you guys already have it wrapped up, the DeRosa group. And here I am sitting there pissed off because now I got to start underwriting more.
That's because I don't underwrite myself, Kevin. That's because I don't underwrite. I don't do asset management. I don't do any of those things, right? And in the beginning, I get, and Angel, you popped this question, and how do you hire if you're under the, if you're trying to get going or whatever, you partner, right? You find people that are willing to take equity as compensation versus dollars. And that's how you find the underwriter, the asset manager, all those things that can do the things that you and I both suck at, right? Because I'm good at customer service, investor relations, making people feel good, talking shop with investors. Not so much on. I used to have a property management company. I tried to manage contractors. I tried to collect rent. I'm too damn nice to collect rent, right? And that's why I shouldn't be doing a lot of the facets of this business. And too many people find themselves doing too much. My asset manager, Justin, he could muddle his way through an investor conversation, but I can do it way better than he can. So why bother having him do it? So I think it's a matter of just really letting people own the greatnesses. So,
and what about this? Have you ever run into this?
Is it I write that?
Yeah. When someone needs out early, have you ever had that situation?
Absolutely. All the time.
What have you done?
Not all the time. Not all the time. I'm lying. Not all the time.
What have you done?
About 5 times in my career, I've had people come up. I've had investors come and say, I'm not happy, because the grass is way, way greener over here. And I don't like it being over here anymore. And so I want to be over there now. Great. Let me help you get out. I've had investors that had a change of heart. I had a guy that gave us $100,000 and then emailed us 2 weeks later that said, hey, I've been thinking about it. I think I'd like to get out of the deal. And this is a big syndication. So we let him out, give his money back. No problem. I've always, if people want their money back, give it to them, right? If people decide they want out, find out how to get them out, because what's going to happen is you tell them no, and they're not going to just take that. No, you knew this is a liquid asset. You have every right in the world to say, this was an illiquid asset. You know what you're getting yourself into. You signed these documents. You said you're either accredited or sophisticated. Either way, you're supposed to know what you're getting yourself into. Half your investors probably had a lawyer review the agreement with them and told them this is illiquid and you can't get into this thing with money that you are going to need anytime soon. All that said, you've all the legs to stand on in the world. It's just not worth A, having a happy investor, B, having them call a lawyer. Is this the last thing you want? Or C, just dealing with that. I want to be growing my business. And if I have someone wants to get out, I've had to get creative, Kevin, where I'd be like, okay, well, let me get you out over the next 6 months. Let me, when someone shows up that says, I want to invest with you, I can have them buy your shares at whatever your purchase price is. If I've got the cash, I'll buy you out personally, right? Whatever it works out to be. And I've done everything I just said, I've done.
Angel, do you have a question or did you already get an answer?
Well, hang on. Kevin, did that good to go?
Yeah, no, I just want to let everybody know there's a new platform out there called Second RE. I don't know if anybody's heard about it.
Mm-mm.
So they're doing like we're just talking about. They're finding out ways for people to come in to buy and bid on shares of, you know,
I've
investment.
heard of this strategy. You're going to see
Yeah.
a lot more of that. I think you're
Well,
going to see a lot more equity get traded on secondary markets.
Yeah, I think if this process goes on and gains traction and speed, it's going to be great for everybody.
Sure.
You know, sponsors and investors, so they can, you know, trade out and maybe, you know, it'll bring in new money.
It's on
and
the way. There's people using blockchain to replace equity and stuff like that and buying tokens and stuff. I'm not a fan of tokenization and blockchain for equity positions because I think the SEC will eventually figure this out. And that's why I don't think that's a good idea personally, but I know people are already doing it. But this thing's evolving and people are going to want to resell their equity on a regular basis. So knowing where that hockey puck's going is certainly good for us to know.
Yeah, thank you.
And thanks for second RE.
Irish, good stuff.
Yes, sir.
Always good seeing you. What's up, Angel?
Hey guys. So Matt, you saw my question, but so I got lucky. I married my underwriter, didn't have to hire him. But as we move along in this, we're learning that there's other pieces that we don't like doing. And so we're trying to pull team members on, but we simply don't have a lot of deal flow. So we can say, oh yeah, sure, we'll hire you for equity, but we don't have that much equity. So how do you get people to commit to being on your team when you don't have that kind of deal flow yet?
Well, then that's not what you don't need people to raise money, right? You need deals. You need people to find you deals. That's what you got to find. To me, there's 4 different seats on the syndication bus, right? There's the person that finds the deal, the person that underwrites the deal, the person that raises the money, and the person that manages the asset once you own it. Those 4 seats, right? I believe that through you and your husband, you have the raise the money and the underwrite the deal under wraps. You probably have the asset management side of it under wraps too through him, because a lot of times the underwriter is also the asset manager because they built the business plan. Why not hold somebody accountable to it, right? I think that if that's where you are in that, we need more deal flow, you need to go find yourself a hunter. And I'm a believer in picking a market, saying, okay, let's just say it's Albuquerque, New Mexico, only because it's fun to say, right? So Albuquerque, that's where we're going to go. You go drill in and find yourself a market expert in Albuquerque, not someone who's going to hunt deals in all 50 states, not someone who's going to just go surf LoopNet for you. No, someone who's going to drill into a specific market, get to know the property managers, the brokers, the everything, and start pulling fruit for you. So I think that you don't need a capital. I think you don't need the equity raising. I think you're going to have to do that for yourself for a little bit. And I think you need a deal finder.
You got time for one more question, Matt?
Sorry, Angel.
It's okay. Thank you.
Love you. No more purple, huh? Oh, there's purple. Okay, cool. I didn't see it. Sorry.
Time for one more question, Matt, or are we done?
Of course. For you,
cool.
Ruben.
Who's going to be the last question of the day?
They get a good one.
I'll take it. When you're talking about getting partners and making sure they're good. What are red flags and what are things that you're looking for to either avoid or you're looking for to keep? How, before you get into bed with these people, how are you making sure that these are the people you want to be with?
Find out who else they're in bed with. Right? Make sure that they are in bed with folks that you're okay being in bed with. If there are students of an organization that maybe has a reputation that you're not a part of, or if that's where find out where they went to air quote real estate school. Cause a lot of people took some academy or guru program or whatever. And that's how they got into this thing. Find out where they got started, right? That's number one. Make sure that philosophy aligns with where you're coming from. Find out other folks they've done work with and get tons of references. Cause it's a small way. It's a big world out there, but it's also a small world. And people like Andy and Ruben know everybody. So find out who knows who, right? And vet them a little bit, ask for a resume. It's okay. And it's also my wife, Liz, her partner, Andressa, that the two of them built the Real Estate Invest Her. Those two were friends for a year and a half before they started the Real Estate Invest Her. So it's okay to date before you get married and maybe not offer a partnership agreement to somebody you met last week. Right? Get to know them a little bit, maybe try let's try for Angel's situation. Let's try finding a deal. Maybe not Angel inking an exclusive agreement with this person that says any deal that she does now has to have this person on it. Right. So try and to see how it works to work on something small together. It's okay to walk before you run.
Thank you.
You're welcome.
Amazing session. Thanks everyone for joining the Build Your Legacy Investment webinar educational series. We've been having a really good time with this. We'll be back in about a month. Want to say thank you, Matt Faircloth, and to everybody in the audience. Enjoy your week. Go out and crush the day.
Thanks, guys.